Did you know that where the market bottomed out in October was the exact same time that all these tech companies started to lay people off? Do you see the connection? In this video, we're going to talk about that. We're going to look at what's going on with the debt ceiling. We are going to explain everything you need to know. My name is David Quintieri, and I have been looking into all of this financial wizardry and bringing it here, making it simple for everybody to learn. Let's dig in right away. First things first, almost 200,000 job cuts in tech pushes new grads to Wall Street. You're seeing a lot of people saying, hey, I wanted to go here, I wanted to do this, but now guess what? There isn't that circumstance there for them. They wanted the high-paying jobs. They had the education behind them, but hey, these companies are firing people and they're hiring people from overseas. They're not doing that for people that are in the United States. There's a lot of chaos in big tech. We're seeing a course correction with a lot of firing, but on Wall Street, you work really hard, you make a lot of money, that's the deal. It really all depends, of course, because a lot of these companies are also laying people off, but not to the degree that we've seen with tech. Let me give you some examples here. Layoffs.fyi, you probably seen this before, they call it the layoffs tracker. It's 200,000 employees laid off, and that's, by the way, 2023. If you look at this, go down the list, you see some of them that you may recognize before, and I just think it's interesting because it isn't just tech, but we are heavily slanted towards that at this time. You could see it in chart form as well. Employees laid off, companies with the layoffs. This is definitely not at the peak that we saw before, but we can look at it broadly and realize that, look, a lot of these companies are getting rid of people. At the same time, guess what? It's not just the people, they're getting rid of real estate too. Companies like Microsoft getting rid of entire buildings. Why? What is happening here? Well, of course, interest rates have been moving up. The costs to support those buildings have been moving up. A lot of people are working from home now. A lot of things are getting outsourced. Companies are saying, we don't need this anymore. We're just going to outsource this department. Other companies are saying, instead of expansion that we planned, let's do some artificial intelligence. Let's bring in some sort of automation where we do not need to hire those people back. That's what's going on. The worst circumstance right now for commercial real estate that we have seen in a long time, since the housing crisis. Potentially, actually, this is worse than that circumstance. That's commercial real estate. Whether that spills over into residential, whole different story. Commercial real estate, stay away. I'm telling you. Look, I'm going to show you some other stuff. What about the debt ceiling? What about personal debt? Credit cards? I got that information. Check this out. First things first, S&P 500 margins are back in that pre-2020 levels, rose sequentially in the first quarter of 2023. I thought it was interesting just to show us that we are well off the tops that we saw back in 2021 when the market was real hot, okay? When you just look at it and just understand that a lot has been happening over these years, I get a little bit, tongue-tied because sometimes we're looking at the year over year, or we're comparing it between 2020, and that was an unusual circumstance. But definitely the margins are getting hit right now because their costs are gone up. You see a lot of these companies, their cost of doing business, their input costs, the wages that they've had to pay people, all their supplies that they need, everything costs more money. I know this myself. Just sent a shipment into Amazon where you're looking at 1,000 units for let's say $315, I believe it was, where that would have cost me through a different method would have cost me, so that was 30 cents a unit, okay? 30 cents a unit. Previously, that was costing me 8 cents a unit, even less than that. Even sometimes as much as 4 or 6 cents a unit. And now it's crazy. The difference is crazy in terms of what they're charging. So everybody's getting hit, small businesses especially. World's richest man sees $11 billion in wealth wiped out right after the stock rout in European luxury goods. This is just one small example. I thought it was interesting just because you're seeing it with the richest man in the world. $11 billion. Just imagine that, what that would feel like. I mean, somebody loses a few bucks and that stings. But imagine just losing 11 billion. Doesn't matter how rich you are, 11 billion, that's gotta hurt. But the point here is that things move rapidly. That's all I'm trying to say, okay? We're not gonna shed a tear for this guy. You can see right now, this is the UK, and the rate at which inflation has been picking up isn't stopping. This is the CPI inflation, excluding energy, food, alcohol, and tobacco. And look at it. You could see the same stats in the US and Canada and elsewhere, where a lot of the cases, it hasn't stopped. And I saw the title, I think it was the BBC that published it. It says, why inflation is going down, but prices are still going up. I mean, that's how backwards and ridiculous these inflation indicators are. Inflation's going down, but prices are going up. No, I mean, what do I say? What do I say to that? And that's why when somebody tells you about inflation, just say, wait a minute, do you know stuff that have gone down in price? Do you? No, of course. Nothing goes down. That's products and services. So let's cover the next aspect, and that is debt. First thing, we can get to the debt ceiling, but I wanted to show you personal debt. Americans far from maxed out on credit card debt. I thought it was really telling to see that green line, which is credit card balances, and then you see the credit card limit, which is the red line. And so people are not spending up until their limits. If you take this overall, what's available. Now, isn't that an interesting stat? You see, unlike the government, it seems that people are not spending up to the limits. Of course, we know this is not to be true, but I just wanted to make light of this given the circumstances of what we've seen with the debt ceiling. I just have a few articles. I just want to show you the titles. Debt limit talks stall as time runs short to avert a U.S. default. Default on U.S. debt risks permanently denting the nation's credit rating. I actually disagree with that. That ceiling fight comes down to spending, freeze or cut. And what they actually said here was like, where are we going to pull this money from to keep the government going? And they said, absolutely not, no way, no how. Cuts to Social Security and Medicare programs are off the table. Instead, funds for programs from education to rail safety, oh yeah, Ohio, anyway, to law enforcement, not a good idea in places like San Francisco and others that are New York that are completely lawless, could be cut. You see? And then of course that's going to have an impact on the economy as a whole and so on. I think this is a whole charade that they're playing. I know you think the same thing, but hey, if you disagree with me, why don't you put it in the comments below why this is actually something real and we're not seeing the World Wrestling Federation, the soap opera. This is a little bit more like Young and the Restless, 90210. Anybody? I mean, what else can we say here? It's ridiculous. This is a joke. They're going to spend more money. They say they're going to cut. Do you ever see the military getting cut? Do you ever see anything that you would consider wasteful, like spying on Americans? The NSA, is that going to get cut? Not a dollar will get cut. Even the budget will be increased on all of that. Yellen, my friend Janet Yellen, says the U.S. almost certain to miss early June payments unless the debt limit is raised. Okay, so I think we get the point here. There's a serious crisis that's going on. They're saying that anyway, we have to wait and see what happens. What do you do though? This article was written basically suggesting like, okay, we got the debt limit, where people are scared. What do we do? Well, for some people, well, this is what they're suggesting. Consider making slow changes to your asset allocation in terms of adding some alternative assets like gold and Bitcoin. Generally, stocks and bonds have been tried and true over many decades. You can see that what is it exactly that they're thinking about and here. And the whole point is to have diversification. We don't really know the situation because it's just been really, really difficult at this time. The disruption will be there. Nobody knows about, what's going to come tomorrow. But essentially having money in different places, different avenues that would be safer and more balanced. That's the whole point. I think for a lot of people, they're going to not do anything and hope for the best. That's one way to deal with it, certainly, but I think we should be already prepared because look, let's look at this. You got a debt ceiling crisis today, you got a stock market crisis tomorrow, you got commercial real estate next week, you got something happening in Europe the week after, oil is doing this. Every day, every week, there's something. There's always something. So if we're just dumping our money into our 401k blindly, that is not a wise decision. And yet that's the vast majority of people. Well, my employer matches. Is that the only reason? I mean, come on, we got to be smarter about this thing here, and we got to really take advantage of the knowledge that we have, or hopefully are accumulating. I hope you appreciate this information, and I'll see you tomorrow. Take care.